Hi everyone and welcome to the weekly Forex Outlook with myself, Kathleen Brooks, Research Director here at FOREX.com for the week beginning Sunday the 17th of March 2013. Well, we've just finished a fairly lackluster week for markets really. Stocks did manage to move higher, but gains have slowed down. We're going to talk a bit more about that later. We also saw the dollar come off at the end of the week. But overall, the main themes are there. The US economy continues to pick up. There are signs of slowdown in China. These are the two main things that could get us going, keep us going for the next week ahead. So let's take a first quick look at the dollar. That's been a major theme since the beginning of the year. A lot of people talking about the dollar potentially changing direction, becoming a growth currency, exceeding gains that we've seen over the last 3 to 4 months. But as you can see, so we're in pullback territory. Now this week is going to be critical. We have an FOMC meeting on Wednesday. The FOMC will give its latest forecast and its outlook for rates, for growth, for inflation. We also get a key press conference from Ben Bernanke, the chief of the Fed. He will also speak. So it's going to be very interesting to hear from him. Will he go is potentially on its way out? That could be dollar positive. That could get us above this 83 level in the dollar index. Key resistance zone that really caused that profit taking, that sell off last week. We think the FOMC being slightly more upbeat on the growth outlook could really help the dollar to rally. But then that has big implications for stocks. Let's take a quick look here. Here shows a variety of US equity indices, the Dow, the S&P, the transport sector, which is considered a leading US market indicator, and also the NASDAQ. So that's the index, also thought of as a bit of a leading indicator. Well, as you can see, all four of those indices are high. Now, there are a couple of things to watch out for next week, which could stock market and could cause just a little bit of a pullback in the Dow, in the S&P, for example. And we think that is the FOMC, any threat that they're going to be removing that big punch bowl of QE3 juice. That could be a real problem for stocks. So it'd be interesting to see how they react. Can they react? Can they still go higher just on the back of strong economic data? Or do they also need that push from central banks? And if the Fed isn't going to be doing it anymore, that's going to be a key thing for stocks going forward. So I think next week will be really pivotal. If we are going to sell off or if we are going to extend a leg higher, we're going to have to get over this hurdle of the FOMC meeting. Now, the other thing that people have started to discuss regarding stock markets is whether or not the big event risk isn't actually the Fed, but is actually China. So could a China slowdown have an impact on, could a China slowdown have an impact on stock markets and actually thwart gains going forward? Obviously, China's become a big input into global growth these days. So that's another thing to look at. Just some themes that could potentially push us a little bit lower in stock markets as we go towards next week. Now, the other thing to point out is that we have the UK budget on Wednesday. Now, the pound, there's been some good news for the pound for once, or some good price action. We've actually seen the pound, as you can see there, come back from those 148 or sub 149 lows of last week and actually get above 151 on Friday. Now, that was through a couple of things. Number one, the pound was looking very overextended to the downside. Remember, trends don't tend to always move in a straight line. But the other thing that has really helped the pound out was Mervyn King. So the governor of the Bank of England came out and actually said, hey, sterling has come too far too fast. It's about where we want it now. So we think the minutes of the BOE meeting that also come out on Wednesday, combined with the budget, with expectations that the budget might be a bit more growth friendly and help growth, could be good news for sterling in the very short term. Now, we don't think that sterling is going to change trend, but we think we could maybe get back to those 152.5, even 153 highs from recently, and that would be used to sell it at better levels. However, what the pound is really looking for is a driver for another leg lower, and if we don't get that from the budget or we don't get that from the Bank of England next week, that could actually cause another leg higher or another recovery leg higher in the pound, and it could be a little bit longer for us to wait for that further decline, maybe to 145 in the pound, like a lot of people are looking for. But overall, a very interesting week for markets. Do watch out for that FOMC meeting, and good luck trading this week. Thank you.